This is the Wade Borth Podcast, where smart ideas spark new opportunities. If you're ready to see money in a whole new way and build a life on your terms, you're in the right place. Welcome back to the Wade Borth Podcast. This is going to be part 3 of a conversation, the conclusion of a conversation we're having with Todd Langford. I hope you enjoy the conversation. Sit back, take what he has to say as a person that's been in the industry for a long time and can bring a lot of insight into what's going on in the industry and within our lives. Enjoy. I think the question David was asking, how long have you been in the industry, Todd?
I first started in this industry in 1987.
Okay. So
Almost
a
40.
couple of years before I did. So thank you so much for leading the way. I appreciate it. Investments are neither good nor bad, right? We have to have savings. All these conversations. Do you recall when you and I first got started in this industry, was that similar conversation that we were having back then? Has that changed? So I guess the biggest question is, what's changed and what stayed the same in our industry?
That's good.
That's a great question. Quite honestly, it has changed. And it's changed from the standpoint, even though there was more focus on the idea of a little more holistic, it still wasn't where it needs to be. My point is, everything was adversarial, right? It was the insurance industry against the real estate industry, against the stock market industry, and they were all like, kind of beating each other up as far as this investment versus that one. And a lot of it has moved into this idea of rate of return. To really be successful, you need to have all of those things working together, whatever it is. And you're going to find out when you have the ability to see all that together, it's going to be much, much better overall than fighting one versus another. And I think that's the beauty of life insurance, is that if we understand how it works fully and the availability of the cash value and other things as part of it, death benefit actually is a huge part during the distribution phase. It's massive. But the cash and having access to it and what that does to shore up those other assets. And now then it's not one or the other, it's both. And once we can see how that works, the difference is massive.
It'd be nice if somebody could put together some software that maybe could compare them.
Well, it's funny that you say that, because the software early on, it was made up of a bunch of little calculators that proved a point. Problem is, if we don't step back and say, okay, but how does that integrate in everything else we're doing? Does that even fit with what our goals and desires are out in the future? I know you're alluding to asset flow, and that's been so much fun being able to use asset flow, which is a calculator we created that allows you to put all your assets, everything you're doing, and then you can see, hey, what happens if I pull the interest off of this account? And you can start to see how all that works together, and ultimately how it sets us up for distribution during that distribution phase, which is the point of having the money in the first place. And so we can have strategy in place early on, thinking about now, that's going to open up all kinds of opportunity in the future. The one thing that we know is not going to happen is whatever numbers we put together today, and it's not going to be there in 30 years, in 50 years, in 70 years, and however long that is, it's going to be different. But we have to have something to start pointing us in the right direction. So it needs to be open options. We don't want to be locked in a box. We know things are going to change, right? We have to be able to move.
Yeah.
Yeah, and it's such a strength there. I mean, obviously what we try to do, again, in our world, and I'll say that, David is, he went through asset flow. He did a presentation to our factoring group with asset flow. I love it because it doesn't tell you exactly what's going to happen, but it can help you start painting a picture of what might happen. Yeah. And I think that goes back to, if people can understand what they're going to do and, maybe a plan, it's not maybe the plan that's going to happen at the end of the day, they start willing to say, I'm willing to start changing my spending habits because I want to achieve X 15, 20 years from now. So again, why are people sacrificing? If we can help them paint that picture of why they're sacrificing, and they can get a better understanding, knowing that it's not going to be exactly as we imagine it. It's like, it's like painting on canvas. We have an imagination in our brain. We paint it. It's probably not exactly what we imagined it, but it is the picture that is going to come true. Something's going to happen in the future. We always say that, dying is, you have 100% probability of dying, right? I was actually going to ask you this question. We can save it a little bit later. It's not a black swan event because we know it's going to happen. It's not a gray swan event, but it's a black swan event when it does happen to people. Right? So
Timing of it.
yeah, it's the timing. So but that is the real helpful part. Is like we can start painting a picture of what might happen. Then it's the little course corrections that need to happen 3, 4, 5, 8, 10 years from now versus making drastic changes because, oh, shoot, we don't have any money. Or like you said, it's all locked up in real estate and I have all assets but no cash flow. That hurts. Right? So we have to sell when maybe the market's not optimal. So there's a lot of things that when we take a look at, like you said, all the calculators that are in your software are all these little micro pieces, but it's like where I see the asset flow is like this ability to take all those micro conversations and put them into a bit of a more macro view of something that could happen. And if we're really good at our job, we're helping people along the way, making these little course corrections using software knowledge and understanding. And quite frankly, what's important to us. I think about what was important to me at 35 is a whole lot different than what was important to me at 55.
You know, Todd, what is really interesting. So obviously, Wade mentioned that this year, one of my big growth opportunities was to incorporate that into my practice and go learn from Todd and Kim how to use something that I've avoided before because I thought it was going to be scary. And I opened the closet and the monster wasn't scary. It was actually pretty nice. But it's really interesting because in the narrative that I've tried to absorb, learning from you this, sure, how to use the calculator and all that stuff, wonderful. But the way I position the conversation, it's been the most helpful because when I talk to a client, I tell them, number one, the fact that I am even willing to bring this calculator to you means that you have a balance sheet with assets. That means you're a blessed individual. I want you to recognize this. This conversation is a conversation that starts on gratitude. You have things that we can use to model the abundance you have now and in the future. Most people don't even need an asset flow because there's nothing to put in the asset flow calculator. And that's kind of changed the tone of the conversation. And then the other thing I tell them is what I'm about to do for you is exactly what's not going to happen. So the conversation here is not about giving you a guarantee of a certain income in the future. It's actually to empower you to recognize that your relationship with your money provides you with options. And the more you educate yourself, the more you understand this, the more you attune you are to this, the more you'll be able to deal with the future. And I think it's a conversation about building the client's confidence that they have options and that they can interact with courage, with life, not fear.
Well, I think that really goes to the idea that a lot of people feel kind of powerless for the most part. It's like, I don't even know what to do. I don't know what that's going to look like if I do it. And I think that one of the things that's happened in the financial industry overall, not just life insurance or anywhere else, is they've made it really convoluted so that clients really don't understand what's going on. And my thought is, if you can't understand it as a client and the advisor can't explain it to where you can understand it, then I think there's probably potentially something wrong there. Having what Wade said and that goal in the future, think about where people are and they're saving money for some net worth in the future. Well, that's it's an amount of money, but how does that make you feel inside? What if it was for that cabin that you always wanted so that the family could come and visit, or whatever those things are that are really important to you? And if your advisor isn't finding that out, to wonder, how can they look into the future and tell you what to do if they don't really know what it is that you want? And, it's kind of like if you're at a cocktail party and somebody comes up and finds out you're in the financial industry and says, oh, I've got a little bit of money. I was wondering, what should I put it in? If you answer that question, really the only answer you can give is, well, it depends. And that is the only truthful answer, because you have to find out more about the client before you can answer a question like that. To answer it accurately, you can't answer it off of that, because it's saying whatever's best without knowing somebody's situation, that changes everything.
Yeah.
That's the prescription before the diagnosis.
Right.
In our coaching program, Wade calls this, do not take the bait. Do not take the bait and ask more questions.
Yeah.
Yeah.
The question I'd probably posed to you, and we went down there, it's like, what's changed in the industry, but what stayed the same? And I think how I see it, and I'll let you answer too, is like, what stayed the same is like, it is communication and understanding of what your clients want. I don't think that's ever changed. I think how we approach it and maybe the lack of it is probably the lack of that communication, because sometimes we let the tools get in the way of the conversation.
Yep.
I see that quite a bit, quite frankly. It's like the tools or the product get in the way of the conversation. So maybe, in my mind, that's why I think it has maybe stayed the same. But part of that, it's also easier to let those tools get in the way of the conversation. I'd probably get your take on that as well.
Yeah. So like when I first got into the industry, there was no computer. There was, right?
Life insurance without computers. Can you imagine that?
Yeah. Wow. How does that work? And the closest thing to a computer was the HP 12C, right? Which, by the way, I still have one in my computer bag and have one on my phone. I grew up with that, so I rely on it. I use it to make sure Excel did its calculations correctly. But no, but that's really all we had. And it was all about the conversation. And what should have happened is, with the era of computers, it should have supported that conversation and made the conversation more real and given the proof that the conversation was correct and that those philosophical strategies actually worked out. That's what the computer should have done. And what I have seen happen is the computer has become the conversation or the narrative. And quite honestly, if the computer is the answer, then all advisors should be replaced with robo-advisors. That would be more efficient and to the point, and you wouldn't have any of the other mess, right? But the reality is we have to have somebody to balance the pure math of the computer with the reality of somebody's situation. And only a human can do that.
How do you, with that being said, Dave and I, we've run into this a couple of times where people are now taking what we're saying and kind of our thought process and plugging it through the AI, right? So that's the next wave, right? So it was a computer to start with, and now it's this AI tool. I see this as just one of those additional things that's getting in the way and replacing the conversation. And I'm just curious how you're seeing that.
Yeah, I think it's still a problem. I think if you take AI for what it says, you've got a serious problem. It's looking over tons of information to come up with its answer, and depending on how you ask that question, it's going to be biased in certain direction over the other of trying to provide that right answer. I think this is a little bit of conspiracy theory, so I'll just throw it out there as that, just real quick. I heard something just recently where somebody's doing some investigation to find out AI is kind of shifting gears to more confusion than anything else in order to stay in power. I don't know whether that's true or not, but my point is, even if it's not, what I'm seeing in the answers aren't always right. They're pulling the popular answers. Well, we know about that. That's mob rule, right? It's the idea that, because all of these people agreed that it was right, makes it right. It doesn't work like that, right? We can't have, math is not a democracy. It's right or wrong, whatever it is. And I think that with AI, I think it can help explain things. I'm not knocking AI, but to use that as the final piece without checking its facts, because it'll make them up if it can't find them.
Yeah, but it's interesting because think about information without context, that just creates confusion because it's just information. What do I do with that? It's like somebody giving you this pen and you hold the pen. Well, what am I supposed to do with that? Hold it for the rest of the day, put it down, write something with it. What is the context that you want with it? And I see AI doing exactly that. It can provide you a lot of information, but again, how do we put it in context? How do we find, again, the human conversation that we need to have to understand, okay, now where do we put that in our lives? Is it important? Is it a 10? Is it a 3? Where's it at in our lives? So again, information without context creates a lot of confusion.
I love that word, by the way, Wade. Makes me think about what you said earlier of checking Excel, doing the formula correctly with your HP calculator. What's the HP calculator for AI? I mean, who has access to the language models that are training any of these company models? Yeah. None of us know. So I think, again, the role of being context for people to understand, hey, there's no wrong or right. This is an answer, but what is the right answer and how does that serve you? I think it's a conversation human to human likely.
I want to switch gears because there's a story that you tell about your mentor, Norm. It always sticks with me. You and I have been around long enough in the industry. We know some of the early players in our world or in our game. And I'd love for you to tell anybody that wants to listen about how you see those people that have impacted you in your life as you've grown up in this industry.
Yeah, a mentor in this industry is so important because otherwise you're starting over. We're not progressing. We're not taking previous knowledge and moving forward with that. Instead, we're having to reinvent the wheel every time. And I see that with a lot of advisors. I think the best thing that they could ever do is get with a mentor. Even if they give up all the earnings, they would pay for that for the education of having somebody to give them a head start in this direction because there's a lot to know. There's a lot to learn. And going back to Norman, when I met Norman in 1987, I was on the path for a biology degree with a chemistry minor. I got sideways with organic chemistry and kind of found computers at that point in time. I was great at math, and I started working with Norman, just working on his computers. He was the first to have the brand new IBM PC with a single 5.25-inch floppy drive. The upgraded one had two 5.25-inch floppy drives before we ever got to the 10 megabyte hard drive that weighed about 10 pounds and would be all the information anybody could ever store in a computer. And so I saw all that come on, and I saw somebody in Norman who all that math training, all the trig, all the algebra, all the geometry that I had and loved, all of a sudden you couldn't use that in financial math. And I had Norman who thought outside the box, and he understood actually how interest rates work, which is a very confusing thing that people today really don't understand unless they go through an exercise. Now, banks understand it, and they use that understanding to make tremendous amounts of money on what people see as, oh, they just have a 2% spread or a 3% spread. No, it works way bigger than that when you're using other people's money, right? And so, we've been through that exercise, but my point is, from Norman, I learned how financial math worked and how different it is and how you can't use grade school math, and yet we see it every day. I understand clients, because they're not in the financial world, using grade school math, a regular handheld calculator to calculate things. But I see it with advisors doing the same thing. And if you take the time value of money out of an equation, it doesn't work. That's where the exponential curve comes from. That's where compounded growth comes from. And we have to understand the impact of that. Through Norman, I learned that thing. There's another huge thing that I learned from Norman, which I think fits a lot of different things. But one of the things that he told me early on was there are no deals in the insurance industry. And that's a huge, huge piece. If you think about it, it's in insurance overall. And everything about cost in insurance is a trade-off in risk for the insurance company. It's the way everything works. If I go get a building that's in a flood zone and I want flood insurance, it's going to cost me a ton. But if I take flood off the insurance, it's going to be less cost, right? Why? Because I relieve the insurance company of some of that risk so they can lower the cost. Well, the same thing happens with life insurance. If we see something that's like way cheaper and promising a lot more, the only way that can happen from the insurance company is if somehow they've gotten rid of some risk somewhere. And so everything is that trade-off, right? And so that's, in a great extreme, that's why we see, why is term insurance so cheap? Well, the risk for the insurance company is very, very low, right? Because if you can get approved for the insurance, your likelihood of a premature death is kind of small, and they're only insuring the term insurance during a time the likelihood is next to zero, and yet you're getting rid of it when, as you said earlier, the likelihood is 100% guaranteed it's going to happen. Eventually we're going to die, right? And so that's kind of backwards thinking if we're looking at a long-term picture. It's not to say term insurance is bad. It has a huge, huge benefit when we treat it as what it is, and that's for a short term of time. But your mentors, you've got to have them in this industry to be able to help as many clients as possible as soon as possible.
And I'm just curious, probably so your point, there's a lot of good things there. I know, David, your language is, the product is perfectly priced for what it is, right?
Yeah.
And so people say, oh, life insurance or whole life is expensive, or I'm like, it's not. It's perfectly priced for the risk that they're taking. And so I would add to what Norm would say is like, there's no deals in the insurance business. And then I would come back and say, good mutual companies always make money. If they're doing everything that they're supposed to, they're going to make money, which is the purpose and which is a good thing for everybody involved. I think people kind of miss that. They always see it as a trade-off, like, oh, it's a zero-sum game. Like, oh, my insurance company made money this year. That's great if I'm the owner, right? Just think about it. Just change the context just a little bit, how valuable that is.
Yeah, and I think most people don't totally understand that, or they haven't been told that. With a mutual company, all of the policyholders are owners of the company. And so you want the company more profitable. It just means more dividend. And legally, for a mutual company to remain mutual, they have to distribute profits. Yeah. Okay?
It's a good thing, right?
Yeah. There you go.
Profit's a good thing. I love profit. And then they have to distribute it even better because they're taking all the risk, right? So yep. I like to say, really a whole life policy is just this professionally managed bond and real estate portfolio that's done at this institutional level. They, for my benefit and guaranteed never to go backwards. So think of how powerful that statement is. To Norm's point is like, but we don't want to give deals to one individual because you have to take it away from somebody else. So
Well, one of the things a good friend Vince Dodona says is, if you asked all my clients, they would say they would rather have 100% chance of getting to 95% of their target wealth than a possibility of getting to 100% with a strong likelihood of far less than that. And so that's a big part of what we have to do as advisors as well, is make sure that in all conditions, whatever happens, disability, premature death, changes in the market, all these things that we know can happen over time, if those happen, they don't impact what we're ending up with in a major way, right? And so we pay for insurance to be able to handle that. Again, those gray swan events that are likely to happen, right? So we want a plan, a strategy that works out in all conditions.
Yeah. Yeah, I would agree with that. That's great. I would like you to expand a little bit about this idea of, like, you worked with Norm Baker, which I think was one of the pioneers in this industry. Truly a great individual. And you were blessed to know him and work with him. But just think about your life had you never met this individual. What would that have been? It's hard to even imagine, isn't it?
It is. I would have been miserable in some, I don't know, some lab somewhere fighting with my chemistry, I guess. It would have been a completely different place. And so not only is that a huge blessing, because I love this industry, I love what it stands for, I love how it works, but on top of that, there would be a likelihood that even if somebody was in the financial industry, would they have known as much as he did? Would they have gotten me off to the start early on? I can remember a story. It was early on when I was working with him. We were headed back, and he said, "Oh, I need to pop into the bank just a second if you can pull in here." And it's okay. So, I went into the bank with him, and he was renewing a note. And the note that he had was 4%, and they were renewing it at 5%. He said, no, we're not doing this. You're not going to raise the note 25%. And the person said, no, we're just raising it 1%. No, that is a 25% increase going from 4% to 5%. Oh, Norman, you always do the weirdest things with math.
No, you always do the That's funny. Yeah. That comes up. It's funny. Like, after hearing, I never thought about it like that. And after hearing you multiple times tell me this over the years now, that's how I think about, decisions that clients make. Should I do this versus that? Like, well, let me show you your options. If you did this would be at 40% increase by taking money at 5 and they're like, what did you just say there? I don't think most people think that way, but it is fascinating that it's exactly what's happening. And a little bit of that insight then puts people in a position, to the point of the beginning of the conversation, instead of relying on me or somebody else, on a position of being confident to make decisions because they understand the underlying principle of that decision. And that, again, what a blessing to be in a career, in an industry where we can really put people in a position to be the quarterbacks of their life, the leaders, the people that manage that relationship with a tiny bit of understanding. They don't need a master's degree in life insurance. That's why you have me part of your team. But you do need the principles that allow you to act with confidence and still have support from a team with myself and others.
Well, and that's the thing. If without that education, David, you can't be with your clients 24/7. Like, you can't go every time they go buy something and be right there with them, right? So they need enough education to have an idea of what's going on, to know, wait, something may not be right here. Even if I don't know what the answer is, I remember David talking about this. Let me give him a call before I pull the trigger on this. And so they're looking out for it because, I think it goes back to what we were talking about with all the bombardment we get. We're being bombarded constantly. I don't remember what the numbers were. It was a crazy amount that we get hit with ads every day. It's like 10,000 ads a person a day. We don't even see it happen, right? It's just on the side of our computer screen where they're watching our email and the stuff's flashing by. All that stuff happens. And so we're all being sucked into all these different things. And if we don't have some knowledge of what's going on, they're going to be prey.
Yeah.
Yeah. And I think that's the true empowerment. That's where we try to go with clients. Like, I understand I'm not going to be here forever for every client. But if I can empower them, if I can teach them, educate them, give them some tools, some understanding, they're going to look out for their best interests, which is great. That's what we want. Is like, and then bring some understanding and some knowledge so they can make good, informed decisions. Making decisions through education is a tremendous position to be in. All right. Any last parting shots, David? I think we're going to wrap this up. I just want to say thank you for both of you. We could probably do this again once a month. I would have the energy for it because this brings joy to my life, and I can have you both on the call at the same time. So,
Second that. Sorry.
This is the conversation that needs to happen. So many of them break down to the math, and the math, again, I'm not discounting the math. The math is totally important. That's why I created software. But the math by itself is not the solution. It needs to be incorporated in a strategy, which is a conversation, which is about this philosophy. And we need to run it through the math to make sure the philosophy works. Because there's plenty of things out there that people say as a strategy that's not mathematically sound. So we have to have them both. They both need to feed off of each other, and neither one of them by themselves is going to be the right answer.
Yeah. I'll just add the words that you share as your favorite ideas because they're full of wisdom. And, if you're listening, you're an agent or a client, just realize that for you to enjoy more certainty around your uncertainty, you need cash and you need assets that transfer risk. One of those assets is life insurance, which is not an investment. It has a wonderful rate of return and is a way for you to transfer risk away. And is an asset that will focus your certainty on not just piling up money and creating net worth, but actually creating an income strategy for you to have a more abundant, more full life. Todd, Wade, I'm eternally grateful for the mentorship that I've gotten from you, for your friendship. Spending time with you has been incredibly valuable to me. I've grown tremendously, and I just hope I get the opportunity in my lifetime to give you back a little bit of all you've given me.
Oh, you do, absolutely. Just the fact that you're willing to pursue and work, that's, it's not the easy way. Easy way to be is to sell the gimmicks and move on to the next client, but it's the right way.
Todd, any last thoughts before we wrap this up?
No, I'm just appreciative for you bringing us forth and pushing it out there because more people need to know about it. Because I do think, in your question earlier about the industry, it's kind of headed in the wrong direction in a lot of ways, and we need to bring it back to those core values.
Yeah, completely agree. I mean, the industry is, in my mind, is the greatest industry in the world. It is the only industry at the worst possible time of people's lives that they're taking this pot of money and pushing it out to you, right? So we had a CEO of an insurance company give this example, and if you're listening, just imagine me stretching my arms out with this pot of money and saying, "Here, this event happened to you. You need liquidity. You need cash. Here it is." Where the rest of the industry, the people that are, again, they're not bad. It's not wrong, but the rest of the industry, they have their arms around that pot of money, trying to hold it closer so they can continue to manage it. So just think about it from a philosophical standpoint. This life insurance industry, the industry that I love, is the industry that is there that when you have the greatest need for capital, for cash, they're there to provide that. And then what's beautiful about what we do in using whole life is like we can provide cash every day before that if we absolutely need it. But at that time, that critical time in your life, they're the only one there that's pushing cash your direction. And so I fight for it. I talk about it all the time. Is like this industry's got to get stronger. And it's just about having great conversations and getting a lot more of the good messages out to drown out the bad message.
Yep.
All right. Thank you both. I appreciate you so much.
Yep. Thank you.
I appreciate you spending some time with me. Change starts with understanding, and action builds the future. We'll catch you on the next episode.